Okay, hi all. In this video, I just want to go through the first part of the newer style of cash budget. And in order to go through that first part, I'm going to use the 2004 example to go through. So when I say the first part, I mean the receipts part. And the receipts part, generally speaking, in this question, consists of cash receipts, credit sales receipts that you receive 1 month after the sale occurred, and credit sale receipts that you receive 2 months after the sale occurred. Okay, so I've just laid it out here to save a bit of time here. Cash budget that you're required to produce is for 6 months from July to December 2004. So I just have a column for each of July, August, September, October, November, and December. Okay, so starting off with the receipts section, where we get the information for the receipts, or like receipts is just another name for income in a way, money coming in. So the information comes from a number of places. First of all, this sales information, because when you sell, usually you get some money in at some stage anyway from the sales. And then this information here, where it tells you from those sales how much of it was cash. In other words, how much of those 525,000 euros worth of sales that you did in July did you get paid for immediately, and how much of it was a credit sale. So you gave the goods to the person and they were to, or to the customer, and they were to pay you at some time in the future. So here's what we'll look at. First, we'll look at the cash customers, those people who paid immediately. And it says that 30% of all sales revenue will be for cash, and cash discount of 5% will be allowed. So that means of these sales that were done in July, 30% of them were cash sales where you were paid immediately, and because those people paid you immediately, you gave them a 5% discount. So you didn't receive 30% of this, but you received 95% of 30% of this, because 30% of this was cash, but you gave them a 5% discount, so you received 95% of those cash sales in cash or in money. So I'm just going to pause this to get a calculator. Okay, so here's what I do. I take the sales for July, 525,000, put them into the calculator here. And then I get 30% of them. So I multiply by 0.3 is how I get 30%. And that gives me 157,500. Now, if I gave a 5% discount, it means that I didn't ask people to pay that full amount to me. I asked them to pay me 95% of that. So rather than getting 5% of this and subtracting it, it's easier just to calculate 95% straight off. And I do that by multiplying by 0.95. And what you get from that then is, it's very dark, is 149,625. So 149,625 is the amount of cash that you got in from cash sales in July. Now, if we look at the rest of them, you do exactly the same thing with all the rest of them. Let's see if the light is better over here. Oh, maybe slightly better. If I do August, you did 588,000 worth of sales, or at least Laney did. So to get how much money you actually got in August, we do, from cash sales, that is 588,000 multiplied by 0.3 to get 30% of it, first of all. So that's all the cash sales for August. But again, because we gave a 5% discount, we didn't receive in that full 176,400. We only got 95% of it in cash. So multiply by 0.95, and that gives us 167,580. So put that in here, 167,580. And you do the same thing for each of these. Multiply by 0.3, multiply by 0.95. Now, the 0.3 is because of 30% of sales, and the 0.95 is because you gave away 5% as a discount. So you only received 95% of that 30%. Okay, you can do it all in one go if you like. I'll just do one more, the September one, 616,000. 616 multiplied by 0.3 multiplied by 0.95, and there you go, 175,560. Pretty quick at that. Okay, I just paused the video and filled in the rest of them there in the same way. Next thing we'll move on to is the credit sales 1 month. So that means the money that you received from credit sales where you received the money 1 month after the sale was done. So if we look at your credit customers here, it says 70% of your sales revenue will be from credit customers. So it means, for instance, in July, 525,000 was the amount that you did in sales, but 70% of that was credit sales. So let's work that out. 525,000 multiplied by 0.7 will give us the 70%, which is 367,500. Okay, so that was your total credit sales. However, these creditors will pay their bills 50% in the month directly after the sale and the remainder in the second month after the sale. So it means that 367,500, half of it will be paid back 1 month after the sale occurred, and the other half will be paid back 2 months after the sale occurred. So to get half of it first, we could divide by 2. That's 183,750. So that half will be paid back 1 month after. So if it's July sales we were talking about, then 1 month after July is August. So we put that 183,750 into the August column. It was 1 month later, which was August. Okay, but also the other half of that 70% of credit sales, which is also 183,750, is going to be paid 2 months after the sale occurred. And so remember, the sale is still, the original sales were still in July, so 2 months after that is September. So in September, you did you got paid 183,750 from credit sales that were done in July. So that goes into the September column. And also the 2 month line. So the 2 month line and the September column. So if we look again then at August sales were 588,000. Let's start with that. 588. That was the total sales. We know that 70% of it was credit sales. So let's get 70%. And we know that half of that then was paid back a month later and the other half was paid back 2 months later. So if I divide it by 2, I get 205,800. That was paid back 1 month later, and that amount again was paid back 2 months later for August sales, August's credit sales. So a month after August's credit sales is September, 1 month after. So you have 205,800 going in there. But also 2 months after August's credit sales is October, so we have another 205,800 being paid back 2 months later, which is in October, and since it's 2 months later it has to go in the 2 months line. So the October column, the 2 months line. And we can do the same thing for September sales. We'll have a 1 month figure and a 2 month figure. October sales, there'll be a 1 month figure and a 2 month figure. November sales, there will be a 1 month and 2 month figure, but since we're only going as far as December, we will only have the 1 month figure for that. We won't have the 2 month, which will be paid back in January. Okay, I'm going to pause now and fill in the rest of those figures. Okay, so I just filled in the rest of the figures in the same way, and you have this type of look where you have no figures here, and you have figures going all the way up here. And since it was 50% and 50% 1 month and 2, you can see that you have this pattern here as well. Now, don't expect to see that pattern if it was, let's say, 30% or 40% was paid back after 1 month and 60% after 2 months. Then these two figures would be different to each other. But when it's 50-50, these two figures will look similar. Okay, last step then for the receipts part or the income part of this cash budget is just to tot up the total amount that you received for each of the months, July to December. So July is no problem because it's just one figure. This plus this plus this is just 149,625. For August, we've got 2 to add up here. So back to the calculator. It's 167,580. 167,580 plus 183,750, 351, 330. And then it's the same, add these three figures for that, these three, these three, these three for this, to finish it off. I'm just going to pause there for a second. And there you have it. I just filled in these last few figures here, and that's the receipts part of your cash budget finished.